Welcome back to Countdown. Now, Europe's equity indices are in retreat and bond spreads are finding year-on-year records on a daily basis. The challenge of getting a decent but safe return on your investment has never been more difficult. Edinburgh's largest property managers appear to have found their solution, and that's London commercial space. Scottish Widows and Standard Life manages tens of billions of pounds in property assets. The former predicts London rents will return 7% a year over the next 5 years. Pretty attractive numbers in this environment. Now, British Land says a slowdown in London office development in the near future will result in insufficient supply to satisfy even low demand. London offices, shops and warehouses are still worth about a third less than their 2007 peak, and values aren't expected to recover at a prodigious rate. But rents are a different story, with Scottish Widows saying they should rise on average 2% a year until 2016. So despite these Edinburgh investments, British landlords are now in the minority in London for the first time ever. Now, a report released today by Development Securities shows that over half of the city offices are owned by foreigners. Germany and the US are the standouts. The trend started 30 years ago. Back in 1980, Brits held over 90% of London's commercial real estate. Now, 15 years later, the figure was closer to 70%. But since the 2008 economic crisis, foreign investors have accounted for 2/3 of acquisitions, making them the majority holders of London's office stock. Now, Development Securities put together the Who Owns the City report, and the Chief Executive, Michael Marx, joins us in the studio. Michael, thank you so much for coming in the studio today. Now, London attracts more investors than probably any other financial district in the world. What is so attractive about London?
I think London, its size, its bulk, its transparency of its market, and latterly its liquidity. The sheer size of the amount of money coming in and trading in London has added to that liquidity, and investors like a market where there's liquidity, where they can buy easily, where they can sell easily, and London offers the complete package.
And when they think they don't lose money, how has the European debt crisis actually impacted London? I know in the last 2 to 3 years, foreign ownership in the City of London have surpassed 50% for the first time ever.
That's an interesting question. New York, for example, has seen an outflow of money from the real estate market. London saw an inflow, so you could characterize that as a safe haven status, that London has achieved type of safe haven status. And money, the debt crisis has resulted in quantitative easing, resulted in very, very low interest rates, and real estate in the City of London offers returns of 5.5%. And if you think that that's safe, and if you think you can trade in and out safely, and if you can think London is a safe place to be, all of those attributes, that's why London has become a very attractive place to be.
And I also guess it makes sense, investing directly in your neighbour. So if you're a European country and you're uncertain about the economic times ahead domestically, then you probably want to invest in the UK. Talk to me a little bit about Germany. They own 16% of office space, and actually this, you told me, are German funds.
That's right, yes. It's largely German funds. A German retail investor can't invest by himself. He invests in local funds in the German market that then plays that money into the UK market. The Germans have been doing this very successfully indeed since the 1990s, reading the market very accurately, coming in strongly, going at the right time, coming back at the right time, taking advantage of all those points that I was making about liquidity.
Is there also a trend of other foreigners coming in from Europe? I'm speaking of Italy, Portugal, I know, and even Greeks. I know they're buying a lot of the houses.
Anecdotally, I don't have the evidence. Anecdotally, we're seeing quite a lot of Greek money arrive. Safe haven status, again, comes back to that. People who are feeling uncomfortable in certain areas of the world want to move their liquidity, their wealth, to ensure that it's preserved. So London, as well as being a viable financial centre, successful financial centre, represents somewhere where people can store their wealth.
And the returns aren't bad at all.
And the returns haven't been bad. The running returns have been very attractive.
So do you expect this trend to continue, and will it continue even if we resolve the European debt crisis?
That's a very interesting question. I expect it to continue. We're seeing, if I can go to the other end of the spectrum, Canary Wharf, the foreign ownership is 99%. It's the ultimate prime stock. It's not that number yet in the city. I would say that the foreign ownership of the prime stock in the city is now about 70-75%. That could and should go higher as foreigners continue to buy the best assets, the primer assets of the city. I would expect that to continue to increase.
And these presumably are actually passive investors, meaning that they put their money in and then get a return, but they don't actually have any say about the day-to-day management.
No, they are, or in the redevelopment of what goes on. They are largely passive money. The question is it hot money? You know, if there's liquidity, can they trade out quickly? Will they trade out quickly? That's something for the future. We don't know.
Have we seen a lot of Middle East money? Of course,
we've seen
had
some. Yes, we have.
Arab Spring and a lot of money outflows coming out of those countries.
Not so much in the recent period, but consistently over the period of our reports over the last 16 years or so, the Middle East money has certainly increased. Yes.
So from that 52% of foreign ownership, what are we going to see in the next couple of years? I know it's difficult to predict, but can it be a 70% figure?
Yes, it could be a 70% figure. On a blended basis, old and prime and non-prime stock, that figure could go to 70%, yes.
Okay, one of the ultimate safe assets. Thank you so much.
Okay,
Michael Marx, their Chief Executive of Development Securities. It's Who Owns a City report out today. Now, coming up next, corporate